Good evening. Welcome back to Be Rich. Today I want to talk about pension funds. America and Europe are full of pension funds which started a long time ago. Most of these are teacher pension funds or state police funds. These are government workers who are assured of definite pension benefits. That is, what is definite pension benefits is also known as defined pension benefits. These people contribute a small amount of their salary into pensions. This pension pot is managed by active fund managers who are supposed to fund these pensions. If there is a shortfall in these pensions, then the respective state government or the central government has to put fund money to pay into these defined budget plans. So far, so good. Till early 1990s or till the turn of the millennium, pension funds were doing very well because they had a simple 50-50 formula, 50% in bonds and some in equity. This gave them adequate returns to pay pensions of retired pensioners and also keep some for the future. But since reserve central banks became very active monetary policy holders and thought that they had solved the inflation problem once for all, they decided to keep interest rates very low. Alan Greenspan started the trend, and we famously now know what is a Greenspan put. A Greenspan's put is an aggressive cut in interest rates, which will ensure that there is an asset price inflation and prices remain very high. Alan Greenspan kept on cutting interest rates, focusing on short term goals and ignoring long term problems. This propped up the market during the great tech crash of NASDAQ in 2000 to 2002. While it buoyed the market and made sure that not too many jobs were lost, it had a long term consequence because the Federal Reserve kept interest rates artificially very low for a long period of time. Pension funds started to take a hit because there was no way they could generate money from their prominently bond portfolio because the Federal Reserve was keeping the debt very low. And if treasury yields are very low, municipal and state government yields used to take cue from that and they started to remain low. Around this time in 2008, there was a major housing boom where most financial institutions, including some pension funds, were trading in mortgage based securities. With the collapse of Bear Stearns, the Federal Reserve was forced to intervene in the market to make sure that the economic system would not collapse and payments would not be frozen. So they decided to bring interest rates to zero and started what is known as quantitative easing. Quantitative easing is simply the Fed printing money and buying government assets. By printing money, everybody assumes they would go physically to print money. That was not what they did. They simply bought bonds from banks which were represented them and credited them with money by a push of a button, money which did not have. Voila, they had created new money. So banks were supposed to lend this money onward and make sure that the economy recovered. In addition to this, what the Fed did was to bring rates to zero. And since using the TARP, Troubled Asset Repurchase Program, Treasury had to bail out all the big banks and insurance companies. The most prominent among them was the American Insurance Group, AIG, and Citibank had to be bailed out by the government. Even the auto companies, GM and Chrysler, were bailed out by the federal government. Ford remained the only company which did not take money from the union or from the federal government. All this meant for an extended period of time, Ben Bernanke kept printing money to buy mortgage backed securities, corporate debt, and treasury. This meant the balance sheet of the Fed kept expanding. But for pension funds, this meant investment in bonds was not profitable and they did not generate sufficient returns. And this continued because by the time the interest rates could go up after the great financial crisis, again there was a big problem in 2019 because of COVID, and rates have been brought back to zero by Fed even before they started to rise. The central banks of the world thought they had licked the inflation problem completely, and it was a Goldilocks state where people were happy at all times and interest rates had to not to go up. While this was a good situation for borrowers, it was a terrible time for savers because savers were not able to generate returns without taking undue risks. Big pension fund managers in US and Canada were struggling to pay back with pensioners what they were promised. The first of the block was the Canadian pension funds. They realized that there was a private credit market in which, for a slightly higher risk, they could buy unrated, not listed government securities. That is, a company would issue debt, even it was not rated fully, or the security was not listed in the market. The pension fund would deploy its money there. These private credit markets had a big advantage. They were for a shorter tenure, between 5 to 7, and because these these rates were higher, the yields they paid was far higher than the treasury or the corporate yields. So pension funds started investing in them. The funds were locked in only for 5 to 7 years, and they were giving higher interest returns. This meant that pension funds started lining up with managers such as Oaktree Capital, which specialized in private credit and distressed debt, which gave higher returns to the pension fund managers. After the success of the Canadian fund managers in managing their pension fund, several American police and school teaching unions have started investing in private debt to maximize their cash flow and returns over 5 to 7 years. This is the case because bond yields have been kept artificially low by the Fed. So, this entails higher interest rates and higher returns, but the risk of default is far higher than in bonds which are rated and are listed in the market. But low returns in traditional bonds have forced pension managers to look at these assets. So if you are a pensioner in the United States or in Europe, you better look out to where your pension fund manager is investing your money. Thank you for watching. Be rich.
For hot financial news reviews and economical updates, watch Be Rich. Please don't forget to like, share, and subscribe our channel.
உங்கள் பேராதரவுக்கு மிக்க நன்றி. நான் டோட்டலாக 5 புஸ்தகங்கள் எழுதியிருக்கிறேன். 3 ஆங்கிலத்தில் எழுதியிருக்கிறேன். அதில் 2 தமிழாக மொழிபெயர்த்திருக்காங்க. ஸோ டோட்டலாக 5 புஸ்தகம் ஆச்சு. இந்த 5 புஸ்தகத்துக்கு ஹார்ட் காப்பி வேணும்னா நீங்கள் கீழே இருக்கிற வாட்ஸ்அப் நம்பருக்கு மெசேஜ் அனுப்பிச்சிங்கன்னா எங்கள் டீம் உங்களை கான்டாக்ட் பண்ணுவாங்க. இந்த 5 புஸ்தகங்களில் 3 புஸ்தகம் கிண்டலில் இருக்குது. அமேசானில் கிண்டலில் வாங்கணும்னு ஃபீல் பண்ணுறவங்க நேராக கிண்டலில் வாங்கிக்கலாம். தமிழ்லேயே யாராவது ஃபைனான்ஸ் நியூஸ் படிக்கணும்னு ஃபீல் பண்ணிங்கன்னா தயவுசெஞ்சு மணிபேஜ்.com விசிட் பண்ணுங்கள்.